Hey everybody, hope this finds you doing well. This is Danelle at Networkchain, and today we're going to talk about the Bitcoin ETF approval and first couple of days of trading this past week. It was a big week and historical week in the cryptocurrency market. As we know it, the future of finance has changed. Our opinion here at Networkchain is that cryptocurrencies and digital assets are the future, and the future is now. So let's go ahead and get into it. As usual, we start off with our cryptocurrency market update. At the time of recording, as you can see here, Bitcoin is currently trading at $42,748. It definitely had a bit of a volatile week. We'll talk about that in a moment. Ethereum actually has been on a tear over the past week. As you can see, it's currently up over 14%, trading in that $2,500 range. And then as we continue down the rest of the top 10, you have Solana currently under $100 at $95, pretty much flat over the past 7 days. XRP the same, maybe almost up to a 1% change over the past week at 57 cents. And then we have Cardano up almost 4%, Avalanche up also almost 4%, and Dogecoin basically flat, trading at around 8 cents. So if we looked at what happened today, or really over the past week, Bitcoin, as you can see here, over the past 7 days, started off trading at around $44,000 when the ETF started trading on the 11th, on Thursday, January 11th of 2024. It started to spike up and it got all the way up to $49,000, and then it started to become what many call a sell the news event, and it dropped all the way down to, I believe it was around 42,000. So it did get down to below 42,000, and now it looks to be stabilizing, at least right now, in that 42,000 to $43,000 range. So especially in crypto, news can move markets and have pretty violent swings sometimes. So if you are interested in getting into the cryptocurrency market, whether it be investing in the pure form of Bitcoin or any other cryptocurrencies, make sure you do your due diligence and make sure you do your research, because this asset class is still very volatile, even though now that we have a product that is trading on the stock market as an equity, being an exchange traded product, there is still obviously some volatility there. So you have to be able to stomach that volatility, especially if you are a shorter term trader. But if you're a long term trader, at least up to this point, Bitcoin has proven to be a very well performing asset. So if we go here to Reuters, and you can see that over $4.6 billion of volume was made in the first day of trading. So there obviously was a lot of interest, a lot of people who were looking to get in to these Bitcoin ETFs. There were 11 that were approved on January 10th. They started trading on January 11th. One of them includes GBTC, which was a Bitcoin trust that was traded on the over-the-counter market by Grayscale. They had the largest fee at 1.5% fee, 150 basis points, and we've seen the lowest now go down to, I believe, 19 basis points. So basically, they were upwards of 7+ times more than the lowest trading ETF fee. So what's happening, and we'll get to that also in a moment when it comes to the inflows and outflows of the different ETFs, you can see that the 11 spot Bitcoin ETFs which includes BlackRock, which is the largest asset manager out of everyone. They manage upwards of $10 trillion of money. So they have access to a lot of institutional money, particularly pension funds and other large investment groups and institutions that may be looking to allocate a small portion of their funds into the cryptocurrency market. So now they can do that with these Bitcoin ETFs. So we see that more demand could be coming to the asset class, and with Bitcoin being the only finite asset, there's a possibility that because we have increasing demand and a finite supply, and it's going to shrink even more in terms of the output that is produced out in the world when we have the Bitcoin halving in April of 2024, there's definitely that possibility that we could see the price rise in Bitcoin over time as we have a finite and short supply, and so that most likely could continue to go up as we have more institutional investors get into these Bitcoin ETFs. So you can read here on Reuters what happens to Bitcoin after the US had okayed these funds, and you can see what the record high was on November 9th of 2021. We went into a bear market in 2022, and in 2023 we started to see a trend reversal on the upside. And leading up to the news, there were rumors that the ETFs would get approved. So on that speculation, Bitcoin did begin to make a major run up, and so now we're starting to see a little bit of the sell the news event. So now we're around that $42,000 range. So that could be temporary. Many people believe that after the Bitcoin halving, we're on a 4-year cycle, because every 4 years is when you have a Bitcoin halving. After each halving is when we see another leg up in Bitcoin when it reaches the next all-time high. So it still remains to be seen whether or not we will surpass the last all-time high, which was near $70,000. Many people are speculating that we will get over $100,000. So we shall see. That obviously remains to be seen, but of course we will keep you posted here on Networkchain. So there is definitely a race for market share, because most likely only a few of the 11 ETFs that were approved will actually have long-standing power and long-standing status on the equity market. So there's a race right now to try to get the most volume, to get the biggest bag, to draw the most investors. So there is a fee war. So as you can see here, fees on the new Bitcoin ETFs range from 0.2% to 1.5%. That's Grayscale. And Franklin Templeton, from what we understand now, has lowered their price, and we can go there to this article now, to 0.19%. So they're trying to attract, because the first couple of days they were one of the ETFs that didn't have as much volume. So they're definitely trying to make sure that they have as much inflow as possible. So they went ahead and decided to change their fee and reduce it from 0.29%, as you can see here, to 0.19%. So if we look at the Bitcoin ETFs sorted by fee, you can see the fee structure here. And so now Franklin is the cheapest at 0.19, and a couple of them like Bitwise and Arc and Fidelity, and I believe the iShares Yes as well. Well, actually there's a lot of these are no fees for a period of time before that fee does kick in. So they need as much volume, they need as much assets as possible, because most of them will not be able to sustain with these smaller fees. So they need to be able to gain that market share. And so that's what they're trying to do now, is just attract as many investors as possible to their ETF. So we shall see if this fee structure changes anymore, if anyone is willing to go below 1.9%. But that is obviously very attractive, because I believe the average on most just generally exchange traded funds are around that 0.2 to 0.4% range. So they're definitely in a competitive range. And so it's definitely obviously good for us as retailers, because the competition brings down those prices. So if we also look at some of the Bitcoin proxies and other companies that are heavily affiliated with Bitcoin, we, of course, think of a company like MicroStrategy. So you can see over the past 5 days, all of these companies, including some of the top mining companies, when you look at MicroStrategy against Marathon, Riot, Hut 8, and CleanSpark, you can see they all pretty much did the same thing. They came up on January 11th, the first day of trading of these Bitcoin ETFs. All of them also had a nice little spike up, and then we've had a sell the news event, and now Bitcoin along with these proxies have gone down over the past day. So there is no trading on Monday, January 15th, but there will be trading back online on the 16th of January. And obviously, we will continue to keep you posted on what's going on with Bitcoin, some of the other cryptocurrencies, as well as these Bitcoin proxies. And as these Bitcoin ETFs have gone live, now people are already talking about the next ETF in the cryptocurrency market that could hit the public markets, which is a Ethereum ETF. There are some applications that are already out to the SEC, and they could make a final decision in May on a number of those applications. So Ethereum may be on the news that they are next in line. There's a possibility that they could get approved. Those ETFs could get approved, or at least one or two of them. That's why the price is starting to run up. So the cryptocurrency market, there's always something interesting, always something new and developing going on. So please feel free to keep in touch with us here at Networkchain. You can reach out to us on YouTube as well as X and IG. We try to make sure that we post there daily. And of course, we will continue our weekly videos here on YouTube. Thank you so much for watching. We appreciate you supporting us, and we look forward to bringing you more soon. In the meantime, take care. Bye-bye.